Welcome to The Vault with Financielle. This is a safe space where we talk all things life and money and no topics are off limits. Hello.
Hello. Can I just say, if you're not watching on YouTube, I'm loving Lucy's outfit. She's giving yacht mum.
It's giving sailor.
No, what's the grandma one?
Oh, coastal grandma.
Yeah, see,
that's my spirit animal. Coastal grandma.
Grandma.
I've got my...
She really is. I'm like Hamptons though. Not
Yeah,
like
that's what the vibe is.
Blackpool.
No.
Not Blackpool. It's giving Hamptons.
Not Liverpool.
Coastal grandma in Blackpool. A bit of a different aesthetic, I think.
I reside in the house.
Shout out to our Blackpool grandma.
Absolutely. No
Yeah.
shade there, but Lucy, you are giving, I have to say.
Yeah, we get a lot of dilemmas or questions about Lucy's hair, which isn't really the theme of the pod, but if you have them, she's willing to respond on
I actually found...
tools and products.
All hail Colour Wow.
100%. We are not sponsored, but I would love to be.
I actually got a dupe.
Oh, and?
From TK Maxx. My hair's a bit frazzled from it.
Oh.
So do not recommend
Stick.
dupes.
Sometimes it's worth paying more for the
Yeah, it
for the
is.
thing that was made famous in the first place. There's a reason a lot of the
not
things
going in my budget.
Oh, it has to.
Oh,
It
it's
can't
so good.
because how thick and long my hair is, and I've had it cut.
You'll be
That
buying it
you-
every
yeah,
month.
you would.
You have to drench it.
Yeah, you
It
do.
says you have to drench it. I'm like, yeah, no shit.
You do
Of course
have
you
to
say.
drench it, but sometimes I will and sometimes I won't. And
Yeah.
I would say give it a go.
Sometimes I do like half leave-in conditioner.
Yeah.
Half drench.
Yeah.
But-
might be worth a go. Honestly, when they say
incredible.
what a great name, because I was like, wow. And I was like, I get it. Like, it's a really good because I would want if Chris Appleton,
Yeah.
Kardashian's hair stylist, Kim, and JLo. I would want it named after me, but it's very clever because it's like, wow. Any video people are like,
Yeah.
wow, this is amazing. And I'm like, it's really good branding, but it's a really good product.
It's so
really
good.
good. No
Really
frizz.
expensive.
I haven't used it today, I thought, actually. You can probably tell. But no one writes in about my hair, so.
They might do, you know. We get a lot of non-finance stuff
Yeah,
coming
we
in.
do. We do.
Random stuff. No
Okay.
weird requests, but it's time.
Controversial opinion time for today. There is no incentive to pay off your overdraft.
Oh, this is from someone the other day that wrote in, there's no incentive to pay off your overdraft. How many people are stumbling through life still living in their student
Yeah,
overdraft?
original student overdraft.
If it's free, is that like if
Yeah,
it's
you
as
don't-
in, like,
there's no
sorry, if it's-
punishment.
do you mean if there's no interest rate
Yeah.
or fees? So
There's like-
an interest-free overdraft, there's no incentive.
Yeah.
You've not like gone out purposely to go and get a loan or something that you have to like pay
Yeah,
back.
and it's not costing you to be in it.
No.
It's like money gifted to you. Because
It's
people
like
always
at
go,
end of the month, it's like, oh yeah, I'm a couple of
Just-
£100. It's not that big of a deal because it's going to get replenished.
I'll roll into my overdraft. I used to do that all the time. I lived in my overdraft. Obviously get dilemmas where they're like, I live in my overdraft and I'm like at the end of it. But for every month, me and Neil would go into before doing Financielle, like a couple of £100 into our overdraft, and we'd be like, it's fine because in 2 days' time I'm going to get paid and it'll get replenished and then we'll begin the journey again. I would agree. There's no incentive unless you're on some sort of money journey to not be in your overdraft.
There's not that like thing of like, I'm debt free. If
No.
you just like clear the little bit of your overdraft that you're in.
No, but the most powerful thing is to get rid of an overdraft.
Yes.
As in, go, I don't require this. Can you please take it from me?
Yeah, I shut my student. I switched my student account, which turned into like a graduate account, and then just turned into a normal account. But it still had an overdraft on it. I was like, I'm scared.
Yeah. you don't want to rely on it.
No.
You don't need it. You shouldn't have to need it. I know a lot of people do, and that's why we've created Financielle, because we've created a methodology whereby you shouldn't require it. But I would say the majority of people rely on their overdraft to get to the end of the month.
Yeah, it's just such a low barrier.
Yeah.
Debt.
Yeah.
I feel
You
like.
didn't ask for it. It's gifted to you by the bank.
Stresses you out when like I can't imagine. Like I'm not great at mental maths, and so when you end up in your overdraft and then your salary goes in and it might tip you back up, hopefully, it's still you don't know what you're working with, because like say if you were paid £2,000 net from your salary and that goes in, and you're in an overdraft and then you get up to like 130 or like you don't know how much because you mustn't have a budget. I don't know. I definitely, like you said, feel for people that for some people it's an emergency lifeline, and thankfully you know that there are low interest options. It's something that I always say when you're looking at different bank accounts. If you are someone who does slip into overdraft and you're not in a place where you've got a good emergency fund yet, you can really navigate fees, and you can look at, some people offer small fee-free overdrafts, or it might be an allowance to go in a little bit if you're always hovering around the lower amounts. Some people get paid little and often, but when people have just got this like
reliance
bad
on
smell
it.
of a student overdraft that's just been there and been there and been extended, and at any point that interest-free status could be pulled, and it hangs over people, like the carry, like, because everyone knows it's a debt. Like, I know it's a bit different because you don't get a bill, it's just there.
Yeah, that's why it feels different, because you don't get the bill, you don't get like a printed, you bought this and this, whereas with a credit card it might become a bit of guilt and a need to want to remove that monthly reminder that you're kind of overspending, whereas overdraft, it feels so different because it's in your current account.
Yeah, it feels like it's yours.
Yes.
It feels like it's allowed.
Yeah.
I love the idea, if you're listening to this today and you have one, and it's because it's just in case, and like you'd be mad not to, and everyone says that you should kind of have it if it's interest free, especially. I think you should think about doing what Holly said and ringing them up and saying, I want you to remove it. That's why we talk about a mini emergency fund. A mini emergency fund is the equivalent of your overdraft. If you're well into your overdraft, treat it like a debt. So order it in your debt snowball, order it in terms of where does it sit in your debts. And so if you've got a credit card debt that's smaller, focus on that first, leave the overdraft and just carry on as you are, because you already are in that space. But it's so freeing to build up a mini emergency fund, pay off your overdraft, and say, no, thank you. Can you take it off, please? Can you just remove it? And
how many people actually do that? But they're like,
the
why?
person at the end of the phone is probably like, are you sure? Why would you do that? Well, but it's there's one thing, it being like a financial number, like a debt on your net worth, like it's a factual thing, but it's the silent feeling of, you owe that, and at some point it's like that nagging thing, at some point I have to pay that back, at some point like I need to get out of my overdraft.
Oh, you get excited for payday, whoop, whoop, whoop. And it's like, oh, it's not as much as I thought, because it's gone to my previous overspending straight away. There's no like I have to go and pay it off, like, no, it's taken away from you, whether you like it or not.
I remember when I first got my student account, and it was like before the like loan even came in, and I remember I was in the Trafford Centre with my friend, and I was in Zara Home when there was Zara Home in there. And I bought something for my my halls,
my uni room
that I didn't even have yet. And it was like, and I was like, oh, I've literally got no money. And I was like, oh, I've got an overdraft. And that was the first thing that put me into my student overdraft. Literally like a little vase.
What was the thing? Oh, vase. Have you still got it?
From Zara Home. No, I think I binned it like halfway through uni.
God.
But you saw it as free money.
Yeah, it was like, oh, I've got
Was
an
it
extra
emergency?
like £1,500.
Yeah.
And then every year it like went up. But I think when I graduated, it was like, I think the limit was like £3,000. I was like, that's insane.
As well as getting a student loan, as well as getting whatever else you might have got.
I had friends that were like constantly always at the bottom, and then like they'd be like, oh, it's fine, the student loan. I'm like, the student loan's going to get you to zero.
Yeah. And then you pay that back. Like that's not free money either. It is a bit like a badge of honour at uni. Like, how much have you got? I think
it was a bit of a badge of honour.
Yeah,
People were like, oh, I'm in my
awful.
overdraft already. Like, thinking it was cool. There's so much financial education needed, specifically when you get to uni, because that's where that chunk of money is thrown at someone that has never managed money before. You can, a lot of people in college might have had a part-time job, so they're used to getting bits of money here and there, but not a huge chunk of money that they're expected to budget. I still don't understand why it's not given to people monthly.
I want to go to Freshers Weeks, right, and be like, right, this is what's going to happen, Freshers. You're going to be given this. You're going to be offered this.
Yeah.
Listen to us old women. Present company excluded. Sorry, Holly. You're younger than me. You're going to listen to us. Not going to, like, do you think you could not do it? Would you be willing to not have your overdraft? And just see, like I said, there's an element of privilege to what we're saying, because some people, it's a lifeline.
Yeah, absolutely.
The majority, it is not a lifeline. Our biggest, and this is speaking from experience, it's not speaking from opinion, our experience when we speak to our community about student loans and student overdrafts is they ran it, and credit cards actually, they ran it up like they were on, $100,000 a year in the city when they were in student halls. They can't remember what they spent it on. they're coming out with, then on top of that with like, you know, your additional student debt, and then decades later, they're still paying it off.
Yeah. What would be really good is to everyone wants us to go into unis all the time, like, please. And I'm like, they need to make money. They don't want us going in there going, don't get a student loan and don't get this and don't go to uni. Like, we would be the worst advocates for them. But I would love to get some of our community members that have been burned by student loans, by credit cards at 18, by all the stuff that's given to you, and the education's not there, buy now, pay later, get them on a sofa and share their story with people.
Yeah, but tell us actually, if you listeners, you can, on Spotify at least, you can definitely even send us a text, like you just respond to it. You can message through the platforms, you can email thevault@financielle.com. Tell us about your student experience. Are you still in debt years later? Is it your biggest regret?
Yeah, what would you say to a 21-year-old now?
Yeah,
dabbling.
I think that's a good thing to do. Look, we've got time before the new uni year, obviously, because we're still in spring, summer now. So we've got a while. What would you want to tell someone? Because we might be able to come up with, like, I know we get carried away, don't we? I'm thinking like a pamphlet or like an ebook or something for students, and it's not us, it's messages to students, like a
letter to my 21-year-old
a collection of what you would have done differently, what to be aware of. I think we could do that.
We had a lady a few months ago finally finished paying off her credit card that she opened when she was 18 and she was 30.
It's just the gateway.
That, like, a constant line of credit that she's been building up, paying off, building up, paying off, building up. And finally, with the methodology and everything that we teach, she literally was like, I'm done. That's a long time to constantly be spending money that's not yours. Sorry to break it to everyone. It's not your money. Like, you've got to pay it back. Just the student loan thing's just absolutely bonkers, and it's becoming a bit of a crisis, I would say.
There's loans, there's the overdrafts, there's the credit cards, and we've talked about this before, but even the concept of university. So, you know, there could be also some other content that we do over summer as people are awaiting their A-level results. Helping parents and students, or potential students, understand that there's options. Like, you don't have to go to university, or if you're going to go, be mindful of the course you're going to do.
Yeah. What job are you
people
wanting
before they're going in? Because that's not happening.
What job do you want? Like, really, if you've got a good idea of what job you want, is there an alternative avenue whereby you don't have to begin that job with hundreds of thousands of pounds? Because that's what it's going to be for a lot of people, debt hanging over your head. Is there an alternative route whereby you can get paid to learn the job that you're going to go into? And there is, I'm telling you now, there's a better way. There has to be.
And if not, studying more mainstream courses rather than something quite niche, because I think we're seeing that lots as well. We've talked about before in the marketing world, where actually you bet if you want to go into marketing and PR, you go join an agency and make tea. You will learn way more than.
If that was me now, I'd be getting a part-time job to generate income, living with my parents if that's possible, and it might not be for a lot of people, and go and do an internship somewhere.
100%.
Would never ever go and do a marketing degree anymore.
But they're
no like 10 years behind
about that. There's nothing. There's no one. Like, it's like intervention. There's no intervention into that stage of life, because the universities are all like, come on. Everyone's incentivized. The colleges want you to go because it improves their ratings.
Because you can still live the student life and not be a student. I was like, go and stay at your mates. I stay at Laura's all the time. I was in college or high school. I went and stayed to get a little bit.
We'll all have a friend in uni. And you know what? I think nowadays a lot of people do live a student life when they're a grad, but like an early worker. Like, you can still live like that. You can go, people do like weekends away with their friends more often. They do like trips, they travel.
People are getting like married later. They're not tied down early with children.
That's so true.
So people did that student mad stuff because they thought, I'm going to have to be an adult when I leave here. It was like, now people are getting married
kicking it way down the line. We don't want to grow up.
Kids late 30s, early 40s, marriage whenever you want, if you want it. Home ownership. Not many people can afford to do that. It's a very different life now.
There's no pressure to go and live the uni experience.
No, definitely not.
Oh my gosh.
Don't want to live the uni. Have you seen the bathrooms, toilets, living conditions? I defy any of you girlies that want to go and be a uni student. Go and look in the halls. You don't.
I went for a walk and like walked past my old uni house the other day, and I was like, did I really romanticize this, or was it always like this trashed? I was like, definitely this trashed.
And then Lucy and I went to Gales. She would have been doing that as a student. Well, you would, but with your overdraft.
Yeah, probably. And I said to my mum, I was like, God, it seems so much worse than it is. And she was like, Lucy, it was awful.
Some parents must drop the kids outside and be like, Jesus
Yeah.
Christ.
Yeah,
We should have been
literally.
like, Mum, what
I
were you
know.
doing? Why did you jump us off?
I mean, I was in
Waving-
Didsbury, like,
Oh, God, she was. Like, dish ran away with a spoon at the end of a street.
Yeah,
Oh,
yeah.
Let's go for a coffee and a cake.
yeah, I wasn't in Fallowfield halls. Like, I was all right.
This wasn't even a uni question, but this is what happens. This was about overdrafts.
Reminiscing.
And another thing we want to get on our soapbox about.
No. I do worry. We talk about it a lot. We've done a lot of student loan dilemmas because people are struggling. It's obviously like,
Yeah, there's got to be a big shift soon.
and it's not going to be that they're going to pay off the student loan debt. Sorry, if
No.
that's what you're hoping for.
No, they're definitely not. But like, for coming back to the original point here with the overdraft thing, just imagine shocking that person at the bank by going, "Hi, can I remove my overdraft?" Like, I just get excited thinking about that.
Yeah.
In fact, can we ring for you? Can
Yeah.
group call, speakerphone? Hi.
We've decided
We
that
would
Shelley no longer requires
Yeah,
this overdraft. Please remove it at your earliest convenience. You've even got telephone voice and everything.
Okay, time for first dilemma of the day. Help, I'm torn. I just found out I'll be getting a bonus, and rather than being stuck in the dilemma of what to buy, I'm torn on how to save it. So do I A, take it all and put it into my savings pots? I'm building a big emergency fund and getting married this year. B, taking half towards my savings pots and put half into my pension? Or C, do I put it all into my pension?
Can we talk about she starts the dilemma with
Help.
help?
I'm being paid lots of money. I was thinking the same thing.
Tell me
I'm
someone
not
who's got who's got stressed about a decision rather than stressed about
I quite
planning.
like it though. Do you like people being
Help.
stressed about? We get a lot of people actually stressed money coming to them because we're not
Yeah.
used to it. It's always the opposite. It's like, help, I've got a big bill that's just landed and I don't know how to navigate
this
it.
is
But
help,
when
I've got
people
money.
get given like an inheritance or a
Overwhelming.
bonus.
Yeah. Help overwhelming.
Yeah.
So her first option was she's getting married, so she's building up her big emergency fund and she's got this wedding pot. Her second option was half in that, half in pension. And then the last bit was all in pension. And obviously the super helpful thing about putting money into our pension is it reduces our tax liability. It depends how your pension is set up. Is it a salary sacrifice as to how that impacts your tax, or is it a regular one where you contribute after you've been paid, so it comes from your net pay, and so then your pension company will kind of claim the first 20%, but then you will also you might be able to claim more of your higher rate taxpayer. So definitely there's a big incentive there for pension, but not a lot of people would sit there and go, should I put my bonus into our pension? So like
love
massive
Girl
financial
crush.
points. Yeah. And it sounds like everything else is kind of in order. The big thing with pension, because she doesn't say how old she is, but she could be an older bride and be closer to that retirement. And that sometimes is an indication of, actually, if you're a bit behind and you can do, I really should advise everyone to do this actually. We should all be rechecking in with our pensions. So what kind of lifestyle do we want in retirement? Money Helper, the government website, is a really good website to be looking at pension calculators. So how much do you think you might need? Like what size of pot? And kind of work backwards. From that, you got to do a little bit of Googling, but it is really simple and the websites do help you and you can see if there's a gap. And we should all know that. But obviously the more time you have, the further away from retirement you are, the less pressured that is.
And how many of us as well, I think people forget, we compare to our parents and grandparents, a lot of them are mortgage free or were mortgage free in like their mid to late 50s.
So you could have had a lower pot really because your expenses might not have included, for example,
whereas
a mortgage.
now with mortgage rates, people buying homes later in life, people having
cost of living generally is just higher.
It's just not comparable. So you can't be like, Mum, what was yours? Dad, what was yours? Like, no.
You need to do it
Go
yourself.
and have a look and
Yeah.
based on your expectancy to have paid off your mortgage and all these things. Like, don't just assume that you're going to be mortgage free in your mid 50s as our parents were.
Yeah, you have to. There's a lot of good rules of thumb you can find out online about how to calculate that figure, but everyone should really know it. I have to confess, I probably haven't done it for a couple of years. Well, we'll do it. We might do it on an unlocked maybe and walk someone through how they might do that. Financial planners also do this, obviously, much better and much more accurate. And if you do have a particular lifestyle or a particular earning capacity, it's a really good thing to go and speak to a financial planner and they will plan. This is literally what they do. They work backwards from the kind of lifestyle that you want in retirement. So that's important to know that you get a return on your money because it's tax free, sometimes national insurance free if it's a salary sacrifice. So you get an uplift on your bonus, or you get to keep more of your bonus, however you kind of look at it. and you are going to be investing that and it's going to be growing. So it's a really good option, but you have other goals. And so if you are doing your, what I call business as usual investing, then it could be a really good opportunity to fill up the pots that are kind of sooner goals, and hit those quicker. Because when we've hit those goals, it's kind of full circle. You might then turn to put more into investing. I do like the halfway one. Do you know what? Do you know what? It's not 50-50 necessarily, but one thing you could do is, if you've decided that you want to put away, for example, 5% of a 5% pension contribution or a 10%, she could even look at the bonus and do that. So replicate, for every £1,000 she's earning, if she's putting 100 into a pension, do the same with the bonus and carry on the percentages. So she's done both, but not necessarily like 50-50. Those goals are happening. She will want to get married, and she does want to save. So I'm tempted to, I like that one, but that's kind of a D, because she kind of said split. She didn't say 50-50, but you know what I mean? Like, why not mirror? And a lot of people do this, and this is exactly, by the way, what self-employed people should do. Mirror the auto-enrollment percentages as a minimum. Have a little look at that, and just always have it in your mind. For every £1,000 that I make, I'll always put X% in pension. It's a really good discipline.
Yeah, rather than just 50-50, because that's like doing the 50-30-20 rule. Like, it's not as clean.
There's no method to the madness.
There isn't. Yes, it's a nice round number, but
it's nice and clean.
It's not personal to you. And Financielle means everything is personal to you. Like, the methodology is personal to your incomings and outgoings. Yeah, it's really, I agree. I was like 50-50 is the one that feels more comfortable with me, but it's just because she's thinking about lots of things rather than just one particular thing. I don't feel like you sound worried about the wedding that's coming up, because otherwise the dilemma wouldn't have been sent in. You'd be like, well, obviously we've not saved enough for the wedding, and I think we're going to go over budget. So logically the bonus is going to go towards that. I like that you're thinking short term and long term, and that's exactly from an investing point of view how we should be thinking. Pensions can be a great investment to make, because you get the tax relief and you get the top ups, and it's just, I don't know. I'm very passionate about pensions, even though I would have said that to the Holly 10 years ago.
About pensions.
I like free money and investing. my God, why would you not?
It's funny, because I think without me introducing D, we would have both breached our playbook rules, really, because she talks about it's an emergency fund. I'm guessing this is the bigger one.
Yeah.
Because she doesn't sound like someone
No, she doesn't need a £1,000 one.
Yeah, she says building my big emergency fund.
Yeah, and so strictly, if we were following the flow, actually...
Should go.
But then I suppose we're going, you sound quite financially well. If money comes into my lap, do I want it to go towards something that will grow?
Well, that's why I think I like the percentage idea, because in the playbook, what we want is, from the offset, you should be contributing to your pension. I personally never believe you should delay retirement investing to pay off consumer debt. I think that same with if you're self-employed, I don't think there's ever an excuse to not put money into your pension. You just do it on a percentage basis. Yeah. If you mentally decide, I'm like an employee, it's auto-enrollment, I'll put this in, you put that in.
It's not a bonus or a nice to have. It's like a hygiene
it's taken
factor.
Off. It's like it's a tax. And I just think it's because I come at it from the danger of not doing is there's never enough money.
No.
There's never enough money.
In a family budgeting sense, it will always come to the bottom of the list.
If you're self-employed, there's always something else. You'd always rather put something else through the business, like
the family expenses. We need to pay for the holiday. No. I'm like,
so I think mentally saying that I always default do X% is a really good way of you not having to pick a number. You're just having to pick a percent, and then whatever you make, that would fall in with playbook, because it's continued investing on a percentage of your income in accordance with typical auto enrollments. Then you're filling out your emergency fund. But it is interesting, like, for everyone listening at home, if you don't know what the playbook method is, there's an Unlocked episode on it way back. It's probably Unlocked number 1, actually. I think it is. And there's a playbook in app, and so you can have a little look and see where you are. If you're like an OG, or you followed us for a while, you'll know where you're at. If I said to you, everyone, I'm going to give you a £10,000 bonus today, it's going to come into your account today, you should always know what that would be for. So, and this is where the playbook stages help you, because if you have, you've got your mini emergency fund, but you've got £25,000 worth of debt, you really shouldn't be saying, right, I'm going to put 5 in a holiday pot and then 5 off the debt. If you were planning to budget for a holiday and that was 5, then there's a part of me that's like, you should just be saving that up on a sinking fund basis. You shouldn't be moving all that to the sinking fund pot and going, yes, I saved my holiday.
I'm so bad. I always think, I go, holiday.
No.
Whenever there's money, I just go, holiday. But no, I
you
don't
strictly
need to.
shouldn't be doing it.
Well, I don't need to because I've got sinking funds set up that will facilitate holidays. We've got a plan this year because that's the rule of thumb.
Because if you do, what happens then is you move the money to holiday pot, you go, yay, and then you go
spend it on shit.
In your next budget, you don't have to use your holiday fund because you've done it. It'll go to spending. It won't go to the excess at the end. And so if you come into £10,000 today, where is it going to go? The playbook should tell you where it should go.
I'm opening a LISA.
That's what you would do.
Yeah.
So you're going to do you'll do a LISA. And you'd probably do it what for you and Neil?
Yes,
we'll do one each.
Yeah, because we need to.
I think is it 4? I think you put 4 in and they put 1.
Yeah,
5 total. I think anyway. But it's you'll then that's 8. So then you've got 2 more. What would you do with the extra 2?
Pension, because I am behind on my pension because of the maternity leave that I took. So I'm constantly, every time there's an opportunity to top my pension up, I put the more than we would recommend in terms of percentage because I'm trying to catch up, and I've followed the methodology and my excess is in a good place. Pension is where I need to focus my efforts.
So importantly, you are in grow.
Yes.
You've ticked off everything else. And so any money that comes in this month would technically go in your budget. What you meant to do is your income might be predicted to be, let's say 5 for round numbers.
Oh, I put it all in at the top.
And then you go, I've got an extra 10. So we've actually got 15. It flows through your budget and you get the excess.
It goes in the income. It's not a bonus effectively. Yeah. So when she's doing her budget, it would all go in at the top. It wouldn't be, and you wouldn't just add it to your excess at the bottom. It would be like, this
flow
month.
Through.
Yeah.
So you would be putting it towards 2 lifetime ISAs, possibly it could be stocks and shares, could be cash.
Yeah.
And then pension. Lucy, what would you do?
I would split between pension and stocks and shares, ISA.
So you're in grow also. You've redone your emergency fund.
I don't want a house.
Yes, exactly. But that's why you skip over.
I'm skipping that for now.
Yeah. You again have your emergency fund. You don't have consumer debt. You're not saving for a home. So you've flown down. Your big life goals part of the playbook are kind of your sinking funds. And so you're able to travel. You're doing nice things. So it would go down to grow. I'm obviously going to ask you now, Lydia.
I would have said put it on my holiday, but now I know that's wrong. Just emergency fund then. Fine.
Yeah.
Lydia's emergency fund is going to be the biggest emergency fund ever. When are we going to get you in grow, Lydia?
Emergency
and what
holiday.
are you expecting to happen? Like Lydia's like,
she's going to be bailing out the
20 years
government
later.
soon when they're struggling.
I know where to go if I need money. That's all I'm going to say. Someone in this room that's got disposable cash.
Who will never believe she's got a big enough emergency fund. By the way, we don't know the specifics of Lydia's emergency fund. It's an in-joke.
I'm just guarding the claim that
we know that she can't stop putting money in her emergency fund.
It's just pure anxiety.
I
Probably.
hope, Lydia, it's a high yield savings account.
Yeah, it is.
Okay.
No, okay, I'm going to change it then. Like stocks and shares, ISA. But there's a big dip at the moment, isn't there? So that's been stressing me out.
Everything's on sale.
I put more in.
She
Put
does.
more in.
Wolf
Yeah,
of Wall
I've heard
Street
this.
over here is like,
So
bye.
I've got Alex, finance bro boyfriend, going, what is the saying?
Buy low.
Be greedy when others are fearful.
Be greedy when other people
No,
are
it's-
fearful and be fearful when other people are greedy. I've heard that before.
Noted. We're all going to walk out of here.
Oh my God.
I'm
I've got
being
my suit on, my
exploited now.
3-piece suit.
We're giving masculine energy
back.
in here today. I better go and speak to my son. What is he up to? If he sat looking at his investments at the moment, we're all in trouble. Or not. We should be following. Should we?
But Lydia, you do have to find the right limit for you, and it might be higher percentage-wise or amount-wise or like number of months expenses.
Have you got you don't have to
Do you
share
know
it,
what?
obviously.
I'm just gonna get some therapy here, like some financial therapy.
Come on, step into our office.
I saved a house deposit, but I'm not using that now. I'm gonna save it. Should that just be my emergency fund, and then I do the other, or should I still keep
Do you intend on buying a house?
In the next
like 5 years?
You do?
Yeah.
Intend on buying a house in the next 5 years and you've got a house deposit sat there?
Yeah.
Okay.
I don't think it should be your emergency fund. I think that And so if we're looking to use a cash lump sum in the next 5 years, and I know you know this, but I'm just reinforcing it, it doesn't go into stocks and shares because they can go up and down, and we could have a 5-year blip and then a 5-year boom. And at the time that you want to use that money, you've got like a figure in your head. And the problem with stocks and shares is it obviously goes up and down. And so it's right to keep anything that's ring fenced for potentially buying a home away from stocks and shares for that reason. If it's a 5-year timeline, that's about the limit that we say for leaving it in. It's not like you're buying it next year. So some people may be tempted, like if you can afford to lose a little bit, for example, personally, I might invest it because it's 5 years time. But if you suddenly wanted it in 1 or 2 years, so it's right to not put that in stocks and shares. I think that it's a really hard one because what you have to do is scenario plan and think what would happen if. So if you have a house deposit, if you decided that was your emergency fund, at any time that you suddenly wanted to buy that home, you've not got an emergency fund, or it reduces the deposit amount. The full circle moment though, if you bear with me, is let's say you decided to have a lower emergency fund because you've got a house deposit. So when we're talking about emergencies, you've got access to cash.
Buffer. You
could, this is for emergencies. And so if you needed to delay that house purchase because, of a particular emergency in your life, where let's say you wanted to be off work for a few years and that was your protection for it, or you decided to go paint for a year, whatever this emergency is, I'm making it up. But all you would do is just delay the house purchase.
Yeah.
And interest rates are okay now, but they're probably going to at some point come a bit down, and you're not going to make as much in high yields. And it typically it would make more in the market. If you drew a line under it and said, I've got a house deposit, I've got an emergency fund, I'm going to kind of lump them together and have this really big pot of money that's a mixture of both, you then move on to grow and you start investing. Even though investments go up and down, if it's in a balanced portfolio, it's still it's like cash, it's a number. So if you decided to put, let's say over £1,000 a month, let's say you wanted to hit 20 grand a year in your stocks and shares ISA, you can liquidate that if you wanted to help buy a house with it. It might go up and down, but hopefully it's gone up. So what we're talking about here is not stopping, once you've filled up that emergency fund and house deposit pot kind of thing, stopping it and spending everything. You move on to the next stage, which is still saving in a way. It's just putting it into the market. So if you decided to stop saving your emergency fund, accept that you've got this pot of money that could also act as your emergency fund, and then started to invest, it all ends up in one big pile anyway.
Yeah.
Do you understand?
That makes sense.
With what you would invest in. I mean, your capital's always at risk with investing. We're super big on that here. We never say invest, you'll make loads of money. But history has shown us that it will go up over time. And even if it went backwards a little bit, if you put it in a balanced pot, in a balanced pie, in a balanced portfolio, a balanced fund, it won't go down so much that you'd be so disadvantaged.
That makes sense.
Does it? Because I just tripped myself up.
I've technically finished my emergency fund, but I just picked a number.
Yeah.
So it's I don't know how much it should be.
I would model a number. I won't just pick a number. As in, I would go, okay, what do I feel comfortable with? So it might be 6 months expenses.
Yeah.
And once that's done, it's done.
Yeah, I do that. I do.
Goodbye, done.
Pick an amount. Say because of your risk profile, I would say you want the higher months. So let's say
an 8
it'll make you feel better. Well, even
nearly
6. No, 6 is high. I think she's all right.
I'm not at 6.
You're not. Do you want to be at 6, or are you happy with where you're at?
Maybe I'm happy. I don't know.
How many months are you?
It's almost 3 months.
Okay, I would probably do a bit more.
Yeah.
Only if you're a person that.
Is that not including your house fund or not?
That's not included.
Yeah,
Okay.
so she's fine.
No, you are fine. But if you sleep at night would be a 6 month one. Then once you're at 6 months, it's shut shop. Put it in a high yield savings account. Don't worry about it. Don't touch it, and then move on to the next thing. And have a bit of fun with the investing part.
Mm-hmm.
There is then possibility for it to grow and invest in things that you're passionate about. Or not, you don't want your funds to be
I don't like
invested
thinking about it. I like automatic ones.
Yeah.
I do like that idea of it's your war chest, and all you have to think is I might not, if an emergency came, it could, not delay my house purchase. That's the worst that could happen. They find.
Yeah.
And your money, the excess money, will be being diverted into your investments. So it's yours anyway. Like I said, you're not then using that to travel with. You're not going, I'm done. I'm never saving anything else. You're still saving the same amount. You're just deploying it into funds. And I think that'd be a really interesting journey for us to track with you.
Yeah.
Do you know, like absolute newbie to it, feeling a bit nervous. Where do I start? How do I ease myself into it? How do I get comfortable? How do I get comfortable with the drops? Like it has dropped this past few months, this quarter, since earlier in the year, since January, and since kind of what happened in the States. A lot of us have had, unease around pensions going up and down. It is a bit stressful, but for us, we're a long way from that. So it can kind of just
And on an individual basis, if you've got children, you might want a different emergency size fund, or if you're in a couple whereby you pay for a mortgage together, your emergency funds look different. It's different to every individual.
And I would also, if I were you, I'd look at income protection, maybe. Tiny amount. It's peace of mind. So like your emergency fund is all built. It's your how to make you feel good. There's a stack of cash. There's making sure that you have a profession that's like transferable skills, and there's lots of different jobs.
It's not so niche.
Yeah, if you hated us one day and were like, I'm done with this, like
never happen.
the ability for you to be able to go, I can go and get another job, and this isn't the nichest thing in the entire world. That helps. Being in a relationship helps. This is how you build, having that house deposit helps. Income protection, if the thing you're worried about is if I suddenly, had a mental health issue and I can't work, because I've picked that one because you don't have a manual job. Like if you broke your leg,
you're not going to slice your finger off writing a blog, I hope.
But do you have for £10 a month some cover that could cover a proportion of your salary to help pay your bills for 2 years?
Yeah.
For that tiny amount of money, you don't have to have as high an emergency fund. So when we build up this like armory, I call it, of all these like
loads of layers of different things,
layers of defense, you then can afford to step into investing.
Yeah.
Step into investing in ISA, and also step into investing more in pension. The pension one's scarier because it's for later.
Yeah, it's locked.
Yeah.
It's away.
That stresses people out. 'Cause I'm like, what if I need it? And I think you're there. I think until you have bought a property and been in that space, and you are investing in your pension, having it accessible. But everyone should know, if you're getting 10 grand, where's it going?
If you want to explore the income protection thing, by the way, if you go to financielle.com and head to the protection page, we partner with an amazing company that can go and explore that for you. We're not going to tell you what you should get, how much, or we don't know your circumstances, but you can speak to people, and they will try and connect you with a female provider. If that's something that you want, you can ask them for that. But you can go and find out more, because that's the always one where Laura goes, why don't you consider income protection, or could you look at critical illness cover, or whatever the thing is? And I'm like, oh my God, it just creates such a cushion.
Makes you feel better.
In your brain that I never would, because it used to give me the ick. We've talked about insurances before, where it's a lack of understanding, and it's the people that have ever sold to you before, and it's always when you're getting a mortgage, or no. Like that's a perfect example whereby a small contribution each month could just give so much peace of mind for someone that's maybe in like a freelancer role or a creative industry,
or
whereby
if you're looking after money on your own, or if you've got dependents,
single parent.
There's loads of different examples. And I think that's what we talk about, like find what feels good.
Yeah.
For some people, it's low emergency fund, lean into going quite aggressive. For other people, it's convincing them to, you're okay.
Be happy with that number and move on to the next. Yeah. Was that a dilemma?
That was two
That was
dilemmas.
Lydia's dilemma.
Live.
Okay.
Lydia's dilemma.
It was a good one. Well done, Lydia.
Yeah, it was. Okay, time for our community win. Speaking of Legacy Week. This is whatever the financial equivalent of a non-scale victory is. One of my friends was in the process of finalising buying her first house, and she was saying she has to choose protection and insurance for the mortgage. I was able to suggest a couple of things to look into, and even sent her the Legacy Week podcast episode. It felt so nice to even just have a little bit of knowledge to share, and I know the podcast episode will be super helpful for her. Before finding Financielle, I wouldn't have had the slightest idea about any of this stuff, and would have just replied with something like, "It's all so complicated."
I love that. There's
That's
a
what that
library
was
of
for.
knowledge. Yeah, these
Yeah.
podcasts
Remember, we said
to refer back to and share with someone.
especially the unlocked ones, we said we wanted someone to be able to say, oh my God, my friend could need that, send.
Yeah.
Do you know, just listen to it. Even the very fact that her friend mentioned income protection, or like, protection and life insurance because she's getting a mortgage, that she went, ding, I know something about this. What do I know about
Yeah.
this? This is what I know. Versus before it might have been,
Well, like she said, I would have responded with
Yeah,
that
like,
years ago.
oh,
Like,
yeah.
oh, it's so difficult.
Yeah.
Like, oh, look at me, I'm so female.
but even giving someone some pointers, because when you're speaking with your mortgage advisor, they can help you with what to choose. But they're also the salesperson, and so
they're getting a
there's-
kickback.
Well, they are, and listen, they should for that advice and that
Yeah.
support. But it means you've got that one-on-one intense offer,
Oh, it's awkward.
and if you're not
It's
educated,
like walking into a boutique.
oh my
Yeah,
god, like
too
Pretty
small
Woman,
and like,
like
I
Pretty
need to buy
Woman.
something.
One worker behind the desk,
Oh, no.
and you walk in and you're like, shit, and there's not
gonna have
one
to
other
buy
customer in there, and you're in that awkward
Yeah.
thing where you feel like you have to buy
Yeah.
it. So I bet so many people, you're right, feel under pressure with that mortgage advisor because they're like, so now you need, and
Yeah.
you're like, you're just going on the
And
journey, you have to be dragged along.
It's like the difference between a confidence, like let's say you're going into a designer handbag store, and if you are blindly going in and you don't know a lot about that brand, that could be really overwhelming. You don't know what you want, you don't know what the hardware is like, you don't know what the trend is, you don't know what the different prices are, you're going completely blind. Versus if you know a little bit, you can steer the conversation. And so what I love with what she said is, not only did she know what it was, she gave her a couple of things to ask. And so that leads to, with your mortgage advisor, financial advisor, or with, if you're going direct online, you can, or if you're ringing someone, you can ask the right questions so that you get the right product for you. And if you don't get an answer you don't like, at least you're kind of mindful of that. Whereas if you're just going, show me where to sign, what should I get? What do you think? I mean, God, most of us would say, what do you think I should do? Because we've gone there to get a house. We're not really bothered about the insurances
You're
around it.
blindsided when you buy a house.
You're like, give me
what?
the keys.
What am I buying now?
Yeah, I'll sign anything. Like,
I wanted to buy like the vase. I want to buy the fresh cut flowers.
I
for
love
when people
chatting to
arrive.
I do love chatting to mortgage advisors because they're in such a like a gatekeeper position where so many people are worried about getting accepted for a mortgage. Will I get a mortgage? Like, what will this credit impact my ability to get a mortgage? Like, it's because it's the thing you need to get the home of your dreams, your first home, your dream home, your family home, whatever it is.
Didn't realise how powerful mortgage advisors were.
They're
Like,
so
yeah,
powerful.
they're-
They're the gatekeeper.
approved.
Yeah.
Don't like your top.
But so basically, people will do anything to just be approved for a
Imagine
mortgage.
us being mortgage advisors now. Like, we wouldn't let loads of people have a mortgage, would we?
That would be rubbish. We'd
Like,
make
you're
no
not ready.
money.
Not ready yet.
You've got 2 cars on finance in your household. You've got
I'm sorry, you use
your
Klarna? This is
sofas
really
on
irresponsible.
finance. You don't own that sofa that you sat on.
Deliveroo, delete that app.
We wouldn't let people get a mortgage because I'd be like, you are not adding another £1,000 liability to your income every single
But
month
we
because you
would
can't manage
give
advice.
mortgages to people that were really good with their money.
That didn't have
Even
loads of
if they-
credit.
Yeah.
We would be that bank. Okay, if anyone's listening and they want to set up a bank with us,
Yeah.
what we're thinking is only
Financial
giving it to people
behaviours.
that are financially responsible.
Yeah. Show financial wellness traits
Yeah.
instead
here
of
for
just
it.
Email
banging
to
someone.
thevault@financielle.com if you want to set up a bank with
Yep.
us. And we'll make it pink.
what, like,
On
it's
Wednesdays,
hard.
we wear pink.
We need to change that to Thursdays.
Yeah.
Although none of us are wearing pink. So.
Ever.
But I like that win. Thank you very much. And if you have a conversation with a friend and you just think, oh, like I know something about that, or I might be able to help them with that. That's what they're there for. Share them. Say, saw this and thought of you. Listen
Yeah.
to this and thought of you. They won't be offended, I promise.
Okay, time for our second dilemma. How do I get my husband to cover more on maternity leave? When I was on maternity leave with my first child, I didn't pay into my pension and missed out on a lot of contributions. This time round, my husband and I have agreed to use our maternity sinking fund to keep my pension going so I don't fall behind again. But the other day we were talking about our student loans and I realised his loan was much lower than mine. We're on similar salaries and had similar loans. But because I wasn't making repayments during my last maternity leave, mine has grown way more than his. It feels unfair, and now I'm wondering if we should also be using some of the sinking fund to cover my student loan payments whilst I'm off. For context, my loan is around £60,000, so it feels like such a big number. The problem is that this would take another chunk out of our maternity savings, and with only 2 months until the baby arrives, I don't know if it's the right move. I feel like there's so much to pay for and I don't want to stress about money whilst on leave. How do I bring this up to him? Should I push for both pension and student loan contributions or just accept that maternity leave means sacrifices?
Ooh, another gender pay gap for people. It's not a gender pay gap, is it? Gender, like, financial gap that we did not spot. When this dilemma came through, I was like, I put it into the Slack chat. Never even considered this.
No.
Like, obviously, we've talked a lot about the not paying into your pension when you're on maternity leave, and I fell foul to that twice because mine and my husband's financial knowledge around that wasn't apparent at the time, and only later did we learn that that would have been a really financially astute thing to do. We wouldn't have had enough anyway to do that. We didn't prepare. We didn't know what sinking funds were, so that wasn't a reality for us at the time, but did not realise that this was a thing. And I genuinely don't know what you're going to say about this, because I haven't got an opinion on it, because I'm really torn.
I'm a massive proponent of the pension one. Yeah. So you would typically still get paid the right, your employer would still put the right contribution in, and you should check that, by the way. But your employer will continue to put the right contribution in, but you don't have to, and because it's all relative to kind of the maternity pay. And so voluntarily, and sometimes it's cleaner to not put it into the work one and just kind of open a SIP, which is a self-invested personal pension, and do it separately. So that's a good thing to do anyway, by the way. I'm a big advocate with pensions of not just having your work one. Either have a work one that, if the tech's good, if you can get an app, or if you can pay into it easily from your phone, that you should be you shouldn't be logging into it once every 5 years.
No, when the paperwork drops on your annual statement, you're like, who is this?
No, you need to be engaged with it. You need to make it feel like a bank account. If you think about when we're excited about checking our bank balance and how our savings are doing, it's the same thing. And that's why I do encourage sometimes a self-invested personal pension as well, because one, people don't realize that you can't have more than one, but two, you're just more connected with it. And so again, when we get these, we've just had a big chat about that. If you get coming to a bit of money, where should it go? Tracking how it is. And so that can be a really good way of not, messing with, like, sometimes you're not logging into your work pension when you're on maternity. You're not got access to your work account. Loads of really weird things. Yeah. It might be easier just to set up a really simple one with your bank or with another provider, and make those contributions like it's a bill, because as we've talked about, why should a woman's pension go backwards when she's on maternity leave? It just isn't fair. She's already on less money.
You're making enough sacrifices already. You shouldn't have to sacrifice your future. And it sounds like your partner is well on board, and I love this. This is such a good example of how you can work together when it comes to maternity leave.
The student loan one is the hardest one. So I'm definitely a proponent of, as I said, not extra, but maintaining that pension investment so that you can stay on the investment trajectory for when you're older, because you shouldn't be behind. The loan one, if you think about loans separately to this situation, the student loans in this country, where they're taken out of pay, they're taken in proportion to your pay. So it's not like a typical loan where it's a fixed payment and you've got to pay it regardless. You only pay if you earn a certain amount, and then it's a percentage. And lots of people do these calculations to kind of see if they'll ever pay it off. And eventually, you won't need to pay it off. So you have to have that analysis of your loan anyway, I think, which is, am I likely to get close to paying this off? Because otherwise it's like a tax. So in that scenario, I'm kind of reluctantly saying this, but unless you have a lot of excess money and you are intending to work and pay that loan off, because you might not mathematically be bound to pay it, be destined to pay it off, but you might want to. Yeah. You might say, I'm getting rid of that loan, that's going to be going. So therefore, yes, as a couple, why should my loan grow and grow and go more? Because she won't be earning enough to pay anything off, so it'll actually be increasing. They might say, no, we're going to carry on making those payments because it's my goal to pay it off, and therefore I shouldn't be behind. If though, it's unlikely that she'll ever pay it off because of earning capacity and stuff, then it's technically throwing good money after bad. I want to throw a red herring in here though, right? You're expecting a baby, you're not going to split up. Let's pretend you decide that you're going to divorce him later. So let's say you didn't do the extra into the pension and you didn't do extra into the student loan. When you are looking at separating your finances, you will start to look at things like, pension, savings, how assets. And most things typically are split equitably. So if he has a higher pension than you, if you're advised right, and if he's playing ball, then that's kind of taken into account usually. And you can come to it, especially you can use mediation for this, but you can get to a point where hopefully you agree on how it's split. But I can imagine that student loan is handled differently. I would love to know more, actually. I
Yeah.
might be really up for speaking to, I've got a couple of divorce lawyer friends and ask this question. Because let's say you didn't overpay yours and it grew and grew and grew, but as a household, his carried on being paid down.
out of his salary.
So it might be that student loans are not really included. I don't know. I'm being very transparent about this. I really don't know. But you could have not been paying yours down and gone, oh, there's no, it's fine. His is being paid
Cleared.
down.
Yeah.
Cleared.
Imagine.
Yeah. And then you part ways and the loan and a conversation, and it might be a fair negotiation. It might be, well, that's yours. Like, that's not a norm, because debts are taken into consideration. But I don't know, it's a bit of a red herring one or a left field thought, but you could be making decisions which disadvantages future you
Yeah. But
and
I
not
like,
treating each other equally.
I like that if it's not a goal, why you bothered? But like, I love the analogy. Like, it'll
Holly
help.
needs everything to be fair and just, so she
I
struggles
know,
with that. Like,
I can't
she's
sleep
like,
at night if it's not fair. Like, it will play on my mind. But I kind of like that. No, is this a goal that we've discussed together? Have we ever really passionately talked about having clear student debts, or is it just too far out there that we're just going to treat it as a tax and not worry about it, and then focus more on the pension because that's invested.
that is yours.
And
That is an
that's
asset.
gonna
and it's
change
your asset.
And listen, like, the
maternity leave's
husband,
tight anyway. Like,
and the husband, like, has to pay off what the legally has to pay
Yeah,
off.
you can't.
He's not like overpaying a student loan over here and then you're not. The government takes,
Yeah.
the student loan company takes the cut from his earnings. So it's not like that's an intentional thing.
you're already
Yeah.
like 5 steps in front of many other people that wouldn't even consider
It's fascinating though.
sorting out this
that
pension contribution
maternity
with your
penalty.
partner, because
Yeah.
technically it doesn't have to do that either. Like, that's someone coming to the table, seeing your side. Like, that's a massive win. Not that it was ever like a something to win, but a win as a couple to be able to say, like, oh, when your mum went on maternity when you were younger, we decided to make sure that she didn't go behind. Like, that's like a massive step forward for like being a feminist. Like, I just love that, and he can be a feminist by doing that.
loan thing's massive though, isn't it?
Yeah.
Because it is, because it's earnings connected, whether it's maternity, whether it's working part-time,
after the
whether it's
baby's
taking
born.
a lower paid job to help with childcare, all the things that drive the gender pay gap will
100%.
also result in a lower rate of paying off loan, and could be leading to an increase in loan capital because it's not been paid off, and so the interest is kind of going up and up. That's massive.
It was fascinating when this one came in. I was like, I've never thought about that. And my husband was like, oh, good, something else for you to be pissed off about. I think I read it aloud and I was like, did you realise? Because we've talked, so I think Laura and I have been in the national press for talking about the gender pension gap and being on maternity leave, and Laura paying into it with her second and third, and me not paying into it with both of mine because it was before the time and just not realising and stuff. And, we've been very forthcoming and like transparent about it with our community so they don't kind of make the same mistakes that I did. But this one, I was like,
Oh God.
another one.
Well,
Sorry.
It's a great dilemma.
It really is.
I've never had anyone ask that before. I think, like we said, ultimately it needs to link to your personal goals. And if that is going to be something that you can do and you've got the spare money to do it, and that loan payment, total is within reach, then why not? But we say that to everyone. This is regardless of whether you are like on maternity or not.
Yeah.
You should be knowing whether you are wanting to pay it off or not, because this is where people say, should we overpay? Some people apply for refund of student loan overpayments, and you might have seen like in the press before, people going, oh, I got 300 quid back. I've seen people in the community talk about it. Again, you should only really be doing that if your full intention is not to pay it off, because why would you hand good money over after bad? It's the same thing. If you are intending to pay it off,
going back,
leave the money, send it back.
Yeah.
It's life admin that you just don't need.
Yeah.
Great dilemma.
Yes.
Great dilemma.
Any final words today?
I think it's a good reminder for people to check in with that, to acknowledge that when pay drops or when work part-times, like, this is the gender investment gaps, the gender pension gap,
Real
and obviously student loan gap.
Add
It just impacts it, and just being aware of it helps. Like, there's another thing to sort out, but it's definitely a pragmatic conversation to have with your partner if you're planning on adoption leave or planning on maternity or paternity leave. Have a look at your different packages and make some plans ahead of time, because you will find places to spend that money. So treating a pension like a bill is one of the best things you can do. It really is just like a bill. It's so simple.
Yeah.
That's all for this episode. The Vault is now closed, and just a quick disclaimer, The Vault is just a chat around life and money topics. We are not giving financial advice.